The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the January 17th, terrific Tuesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be, and I do mean always be, pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone. Now is not too soon. 877-927-6648. Of course, internationally, 727-445-1044. So let's go ahead and get this show. Of course, you can send me an email, steve@tfnn.com. Inside the Tiger's Den, any ping will do. I think that comes from Steely Dan. Although I don't know if they say ping. But I say any ping will do. So let's go ahead and get this show started on Terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, the Dow trading off 43 points at 19,842. S&P is down 4. Trading at 2270. NDX is off 14 points, trading at 5044. NASDAQ Composite down 28 points. Russell is the leader percentage-wise in the clubhouse on the way down. Off a percent. Well, actually, it's the semiconductors. They're off 1.1%. $10 to the downside. Trading down at 914. Gold is up $17. Silver's up 38 pennies. Light sweet crude is up 54 cents. Natural gas down a little bit. Lead the charge here to the upside. This afternoon, it's Williams Clayton Energy, $39, 38% to the upside. Forward Pharma, thinking forward, 50%. Maybe it's buyouts going on. I don't know. It's up $9. That's for sure. Charter Communications up $6.50. PVH Corp up $6.50. AutoZone is in the zone. It's up $5.70. To the downside, Arista Networks down $11 and change. That's nearly 12% to the downside. Amazon off $8 or 1%. You've got Ultimate Software down about 8, Alliance Data Systems off 740, Regenerate Pharmaceuticals down 6, Goldman Sachs up 578 with volume of about 2.9 million shares. But the question is, where do you want to begin? Now, I didn't see any cards and letters, really, which means emails or questions inside the Tiger's Den before we started. So we'll just have to pick a random place to go ahead and start today's action. I think that random place, what I would say is, when I sit down at the system to do the show, it gives me the opportunity to just really focus on a number of different charts that that I can tell you I'm not necessarily focused on during the morning, afternoon while I'm trading out here. So it just allows me to just kind of step back, say, okay, what's the market communicating to us? Take a look at a number of different instruments. So let me pick up. Earlier in the Tiger's Den, maybe around 11 o'clock or so, I posted a couple of charts. And I didn't post any charts. I just posted a couple of questions. So here's what it is that I'm seeing. The question becomes, and I'm neutral with regard to the indices. Not neutral with regard to bonds. We've been long bonds for a while. Not neutral with regard to gold mining stocks. We've been long mining stocks for a while. Those are two sectors that I have clear signals on with regard to what they are doing and what they're doing short-term, long-term, and so forth. With regard to the markets out here, yes, I have been, and I was short for a bit and just simply said to subscribers, let's just get out of this. It's just the signals are, I can provide you with several bullish signals with regard to the indices and several bearish signals, and that just basically means neutral. And in neutral, it just really means a chop, chop, fizz, fizz out here. Now, can that change? Will that change out here? And today we're getting a couple of signals that say maybe. So one of those signals, I wonder where the heck I put this chart. Maybe it's right here. Is it? Did I do it right here? God, I hope I sure did. Let me see. Did I do it right here? Because this does not look like the chart. I'll be a son of a gun. Well, oh, maybe, well. Oh, that's terrible. Because I did some work already. I did the work already. I'm wondering if I somehow did the stupid. No, okay, right here. Yeah, I was gonna say, yeah, I call myself stupid all the time because, in any event, let's just get real here. What actually occurred today? Let me show you from this perspective because visually you wouldn't really see it. This is the NASDAQ composite. Forget about the yellow horizontal lines and the rectangles there. That's really just a measured move of where the NASDAQ is actually headed to over time. But that's not what I want to take a look at today. If you take a look at today's candle signal, you would not, just by looking at it, most people wouldn't. I did it because when I see how the indices open, I take a quick peek and see if there's any type of signal that's generated. And if we take a look at, for example, there was a gap up between the session of January 12th and January 13th, Friday the 13th. You see the high on the 12th was 5550.67. And the low on the 13th was 5557.20. So there's a little bit of a gap there, right? A little bit of a gap, 40-cent gap to the upside. Now, today, when the market opened, or forget about when it opened, the actual high today thus far, 5557.05 versus 5557.20. So that 15 cents worth of gap actually creates right here, Friday's candle, Friday the 13th, for those of you that are superstitious, creates an island top pattern inside of the NASDAQ. Now, is it worth paying attention to? Well, I don't know. Let's go take a look at other, basically stupid. You could say it. You could say it out loud. Stupid question, Steve-O. So assuming that the NASDAQ doesn't rally going to the close, I don't know whether it will or whether it won't out here. But if it doesn't move into, today, that is, any portion of that candle, and each of us take a look at gaps a little bit differently. Some people look at the bodies of the candle, which the body of the candle is the essence of price. When it comes to island tops and bottoms out there, I'm looking for any ping will do, one tick, one penny, one whatever it is that the instrument is trading at. And so previous island tops or bottoms out here. Well, inside the NASDAQ composite, you come back to the September 22nd, I believe it is, and September 23rd level. We did have a gap to the downside, created an island. That island ended up being overcome. Not that it didn't eventually lead to a little bit of a move lower, but basically, yes, any major dude, you've got that right. If we take a look at, it didn't necessarily create that, hey, this is a significant top out here. The island bottom, most certainly, Mon, that came in right around that that Brexit low, was it not? The June 27th, June 28th, 29th time frame out here. So that created, or really, the island really created, I believe, on June the 30th out here. Nice island bottom. So we pay attention to them. Hey, we do have to pay attention. You go back to the December 30th, December 31st time frame, island top out here, price getting below the oscillator unchanged line. Well, right now we're really trading right just slightly below that oscillator unchanged. Let's take a further look at this and what else we should look at with regard to the NASDAQ composite. We'll get back to this first one. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we were taking a look at the NASDAQ composite. We know that as of 1:18 in the afternoon, there still is an island top formation inside of the NASDAQ, which has been, one of the strong indices out there. And so we want to pay attention to that. What I posted in the Tiger's Den earlier, because what's interesting, if we take a look, currency rules basically what the markets are doing. It's just a matter of us kind of doing the Rubik's Cube to figure out, well, what correlates to what out here. And if we take a look at the FTSE, all right, so if we'll take a look at the FTSE out here, you'll see that it's had a fairly bad day, closed at its session low, which was 7220.38. Now, what's interesting about this chart here, it doesn't show on this chart, but what I will share with you is that Friday's high, January 16th, was a seventh wave move. We call that letter G. Now, you know as well as I do that that's important for us. Now, how important? Look, it can identify significant tops and bottoms. And just as a quick example, here's Goldilocks. When gold was making its bottom back here, I don't know the exact trading day. If you're watching on Tiger TV, looks like around December 15th. Out here, December 15th, from the little spike high from the election time frame out here, we can see that it was a seventh wave move to the downside. So we pay attention to those patterns out here, and I can now say we now know that we have a confirmed seventh wave move to the downside. And even though this chart here doesn't show it, price is trading below its oscillator and change line. Why is that important? Well, it would be important if it correlated to the indices out here, just as a kind of a leading indicator. And if I do this, so here, this happens to be a chart with the FTSE on top, NASDAQ composite in the center, and the Great British Pound as the futures contract inverted out here in the bottom panel. And if you take a look at it, directionally speaking, the FTSE indice and the NASDAQ composite, in other words, our U.S. stock market indices, they really correlate well to each other. The bottom panel, because the pound has made a significant reversal today, and we'll go take a look at that. That's simply just trading into a hammer candle where we know it hammers out a bottom, or should be, and it's a giganto hammer out there. It's kind of like the sledge hammer. Who did that song out there, for those of you in the Tiger's Den? The Sledgehammer song. Right? Pete or somebody, right? In any event out here, remember this chart is inverted. That's right. Peter Gabriel is the dude. And if we take a look at, so the question was, hey, does the FTSE really correlate more to the Great British Pound? And the answer is, hey, there certainly is some correlation here. However, there are times where it just really goes awry. And the example that I gave was just simply as the FTSE, as the NASDAQ was forming its highs back in 2015 in the May, July type time frame out here, the pound was going in the opposite direction. I mean, it was really weakening out here, which would have meant that really the NASDAQ should have, or the FTSE should have been moving higher, and it was not. So I think that the more important note to take from this is that, you know what, there is a really good correlation to pay attention to between the FTSE and the NASDAQ composite. So if the FTSE has formed a seventh wave move to the upside, because remember, I'm neutral, so I can look at this both ways out here, and that's really what I'm doing, always looking for clues, right? You and I are we're little gold miners looking for clues out here. Silver miners are data miners out here, and this is what we're doing is we're mining the data to see if we can figure something out here. So the FTSE has given us a fairly significant topping signal. Now, if it overtakes Friday's highs out there, there is nothing more bullish than a failed bearish pattern. But there's no way that we can say that it's not a bearish pattern any more than we can say that seventh wave move when we looked at the gold contract was nothing more than a very significant bullish pattern out there, right? So we can just kind of keep things in perspective out here. So island top in the NASDAQ composite, seventh wave move in the FTSE. I think we have a couple of signals out here that are important, that are impressive with regard to when markets make turns out here. Now, if I just simply take a look at the NASDAQ composite out here, again, but just look at the advanced decline oscillator reading, is it making a lower low today? 35.71. Today's 38. Yeah, it is making a slightly lower low. Price hasn't been able to take out the trading session from October the 12th out here, but it is in the hands of sellers out here. Albeit it doesn't look like it by much, but it is, and it is what it is. You hate when people say that. Sorry for saying that. I guess I just had to say that out here. So what does this mean? Well, as long as I'm on this page here, here's the problem. Gobs of liquidity still exist. If we're going to use the New York Stock Exchange as a liquidity gauge out here, its advanced decline oscillator, which happens to be in the bottom portion of my screen, so it's kind of narrow, but you'll see the reading says 38.46, not minus 38.46, but a plus 38.46. New York Stock Exchange as a liquidity gauge is saying, bring it on, bring it on. So this is not confirming what the NASDAQ composite is or the FTSE is communicating to you. We know the Dow has been, its advanced decline oscillator reading has been down below zero since December 28th out here, but it's really just been a sideways move. And the VIX index, volatility index, rejected, I do mean rejected, by its 50-day exponential moving average at about 7 o'clock this morning when it traded up to that's Stevie's red line out here right now, 1277. So are we going to get back to a green market today? Only if the FTSE gets below, not the FTSE, what am I talking about? The VIX index, volatility index, gets below 1277. It stays below 1277. Otherwise, I expect a reddish market, but so what? That doesn't mean that the market has turned, but we've got it. So tomorrow when you wake up, paying attention to the FTSE, if you're up early in the morning, will be very important to do out here. And so, again, we have really conflicting pieces of information when we take a look at the market. So volume-wise, and not volume or anything, but if we do take a look at, let's take a look at the Qs as an example. Today, it's a sideways to positive move out here. Of course, that's by Apple. So, hey, probably I should have just gone to Apple, right, because of its weighting structure. So let's actually go to Apple and take a look at it. Now, where's Apple headed? Right, let me get the volume turned on here, because without that, and we like the volume on individual stocks, right, more so than the ETFs, because then we'd take a look at the underlying instruments and see what they're doing. So in the case of Apple, volume today, 21 million shares, going after a swing point that had 27 million shares. So it's got the volume going into the January 11th area. It's got the volume going into October. Well, maybe it doesn't. That's got 64 million shares. But does that matter that it doesn't have the volume going into October 11th? And the answer to that question is, well, I don't know. But let's go find out. Actually, we can find out. I mean, do I know? Actually, I do know. That would be disingenuous. But we don't really know. I didn't really know till I went back further and went ahead and took a look at the weekly charts out there. That part is not disingenuous. So I just had to remind myself, hey, what is Apple doing? Well, it became pretty evident when we took a look at the A to B equals CD pattern. You see, what Apple's doing is doing nothing more than completing the lightning bolt pattern to the upside, with its first projected target being 123.29. So do I really care whether it's taken out a previous daily swing point with or without volume when the weekly has already confirmed that? Yeah, exactly. No, Jimmy cracked corn. And I don't really care because the weekly candle session from September the 12th had volume of 390 million shares, taking out 132 million shares. Yeah, I'd say this is very confirmed. So what the Apple's doing is trying to make a Gartley sell pattern. That's going to be priced somewhere around 124.90. Steve Rhodes from TFNN.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So what does that mean? We were taking a look at Apple and its price target. Well, it's certainly going to influence the NDX 100. Again, let me go back to that because we were going to a break, and I want to just make sure that we're clear. It's always important to go back in our charts when we're taking a look at them. Go further back on the left-hand side, take a look at what's going up on top. In this case here, if you're looking at daily, what's going on a weekly basis, and what's going on below on a shorter-term time frame. So if we take a look at Apple, the swing point that it's targeting is actually the swing point from the week that began April 27th. Now, there's good volume there, 420 million shares. If Apple's moving into that level, which, by the way, the bottom of that is 124.58, the actual retracement from that high down to the low with regard to the 0.786 area is right around 124.90. So it says it's going to tag that candle. If it closes inside it, volume or not, meaning above the 124.58, can still go test the high. If it's moving in there with volume, then we say it's communicating to us that it wants to go test the top of that candle, which would be a 100% move of a move. But wide-ranging bar, accelerated volume, taking out the B point of an A to B equals CD to the upside. So that message was already communicated to us on September, the week that began September the 12th. So we don't give a hill of beans necessarily about really what's going on a daily basis out here, whether it's taking out a swing point from a little bit further left or not, because we already have the confirmed. All that would do is just give you a double ghee confirmation that there's no question where Apple is headed to. So that's the conflicting pieces of information that really we have between an island top and the larger NASDAQ composite, certainly versus the NDX 100. Do we have any kind of real reversal patterns inside of the NDX 100? I don't know. Let me just take a quick peek over here. Let me go switch to a different chart. Let's actually pull up the NDX 100. Let's just see, is there anything here? So let me pull this chart over. Is there anything to give us an indication that it's topping? And the answer is, hey, it's made a 1 to 1.272 A to B equals CD so far. Today is going to give us a, looks like, depending on the close, 1, 2, 3, 4, is going to give us a TD setup, TD 9 count setup. That can be a place where you'd see a reversal, but doesn't have to be. And today, all that took place on any move lower was a test of Stevie's red line, a test of support out there, and it was boinga, boinga, boinga. It was just simply using that as a little trampoline to move to the upside. So the answer to the question, do we have anything that suggests that the NDX 100 has topped? And the answer is no. No bearish reversal signal, indicators out there that just simply give us a signal that maybe, just maybe, there could be a top that's formed. But in the NDX 100, it's going to need Apple to cooperate, which means that my entire analysis is going to have to totally fold like a cheap napkin out there, and which, as you know, can and will or can happen out here. So I'm still more neutral with regard to the indices than anything else out here. Now, Tom had a question. He is back in the GDX and Nugget out here. Says, where did that message go? Shoot. I don't know where that message went, Tom. Scan through it. But he's in it and was wondering if he should stay in it for a few more days out here. So as of yesterday morning. That's Happy New Year. Anyways, he's in it. My phone, the way that the emails come in are a little bit jumbled or what have you. I'm still learning how to use email on my phone. But let's go. The question basically is, should I stay in it? And so let's go take a look at those. Let's take a look at the, I think you said it was a Nugget. Gosh darn it. Let's go take a look at the Nougat out here. Now, we prefer to use and assess things based on the GDX out here, but we'll take a look at the Nougat. Give you some and like I'm going to give you the answer to the question out here. Do I know what's going to take place in the next 10 seconds or 2 minutes out here, or even 10 minutes? No, I mean, we could really do some analysis and try to figure out what its message is out here. But where do I think that the gold miners are headed to? Just simply higher. It's just that this is I will say, Tom, this is a longer term type trade, but I know you're in and out of it. But this is not like this is just a counter trend rally that is going on. So that is at least not the message as of 1:35 in the afternoon, nor was it yesterday, nor was it on Friday, nor was it last week. The message has been very strong here that the mining sector is probably going to be the great winner of the first quarter in 2016 out here. But bonds also are going to be a big winner out here with regard to where they're headed to. They have much further to move to the upside. Now, just a little swing point analysis here. You've got a swing point that could be the B point, or should be the B point, could be the B point of an A to B equals C to the upside, that being January 5th. 96 million shares, you're coming into that light, 47 million shares. Does that matter? And I will say a little bit, but it's not the influencing factor with regard to Nougat, with regard to GDX, with regard to JNUG. The volume, schmolium out there is really the deal. 135 million shares inside of GDX is being attacked with 41 million shares out here. You know, the real instrument that is moving these markets, these instruments out here, is the Japanese yen. And so if we go take a look at that, do I have that up here, Johnny? No, I don't. I got to put it up here. So we got 6JH7. If we go take a look at it, and let's go ahead and put on our profiles, by the way, you're going to see that this currency pair is just simply getting stronger. Stronger is not good for the Nikkei, so we ought to see the Nikkei move lower out here. You know, where should this retrace to? Well, we'll just simply go to what they've called the Trump bump, or whatever they're calling it out there. I don't think so, because the market normally forms its bottoms in October. It has nothing to do with Donald Trump or Hillary Clinton, okay? The market forms bottoms, you know, and so as the move may be expanded because of anticipated, you know, financial gains and so forth, so on and so forth. Yes, it is. But if we do take a look at where's the yen headed to, well, at least 90 cents, yen futures, but more likely 93. It's got a huge movement to the upside. Now, today, what it's dealing with here is it's just trying to clear weekly, and I do mean clear weekly resistance. And it's done it. Of course, the week doesn't end until Friday. Although I'd like the one-day work week. I do like this 4-day work week stuff, 3- and 4-day work weeks. But in any event, we're not going to get that for a while, or at all. But certainly you can see that the TAS weekly profile has been taken out. And I don't expect that we'll see it close below. But how can I expect? I mean, at this stage here, all systems are go to the upside. This currency pair is truly ruling those two worlds out there, gold, silver, meaning mining, meaning metals, and the 30-year Treasury. It is not complicated. There's no reason for us to complicate anything. That is really its message out here, Tom. And so do I suggest you stay with the trade? Yeah, I think that in your case, because you're doing such a great job with regard to the day trading-ish aspect of this, is just keep doing what you're doing and keep looking for those pullbacks that you're buying and then just move the upside. Either do that, or just get your principal back on this stuff and just keep building a bunch of free shares out there and do it that way. Because the mining equities, they've got a lot further to run, maybe more so than trying to trade the index ETFs out. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back. Dow off 33, S&P is down 3 points. So let's take a look at, both, because you and I, we can look at any market, any chart. Doesn't really matter what the chart is. We utilize the same tools over and over and over again. So that's the cool thing about learning the different sets of tools, at least the different sets of tools I believe that you should use in helping you to determine what a stock chart is communicating, what buyers and sellers are communicating to you and I, and just kind of ignoring the media hype news and stuff like that. Because quite frankly, most of them aren't taking a look at what sellers and buyers are really doing. If we take a look at the Great British Pound as an example. Now, with regard, and AAG, I wanted to just say to you, because I don't know, you would ask, we had a dinner ask me to take a look at a 240-minute chart for the U.S. dollar index, which I did during a break. I don't have that chart up right now, but he was looking for a pattern, possibly a bottom pattern, and he was looking at a 4-hour chart. He may be right, for all I know. I'm not going to give you the 4-hour take. I'm going to give you the daily take, and I'm not going to give you the take here that I gave to subscribers yesterday based on what I really did over the weekend. Even though the markets were closed, I went ahead and sent out an email because I had a number of different charts. So I didn't really want to clutter up with just my daily newsletter that would go out today while the market was open. But it was very conclusive with regard to what the instruments were telling us, and that was this: with regard to the U.S. dollar index, it's headed lower. It headed lower for a while to come out here. And that, though, wasn't really the key to boding well for our mining and bond trades out here. What was that was being influenced by the yen, which you and I had taken a look at. But nonetheless, we took a look at what the U.S. dollar index is doing, and the yen is a component of that, about 13%, 12.89, something like that percent. And the Great Britain, I think somewhere around there, and the Great British Pound, the same type of thing. With regard to the Great British Pound, which was moving lower, was doing nothing more than testing. So it's getting stronger out here, doing nothing more than testing this big, huge hammer candle from October 7th. I think I mentioned that during the first breakout here. That is a giganto. That is the Peter Gabriel sledgehammer of hammers out here on October 7th. That says that low of 119.50 is really significant. You close below that, it's curtains. You're getting back to parity inside the Great British Pound. And I say, let's just back up the truck and go over to London and just have a ye old time out there, because we're not paying 2 for 1 out there. Nothing like having the U.S. dollar and the Great British. But it's got to break through that. And is that going to happen? I don't know. I sort of do know. You sort of do know out here. This bottomish area in this 119 range is significant. There are people that are backing up their trucks out there and going along this currency pair. You have said so many times to me, markets don't end on wide-ranging bars, Steve. Well, guess what? In this currency pair, it is a widest ranging bar that we have seen in a long time. Well, really, quite frankly, although it didn't qualify as a wide-ranging bar, you got a big hammer like that. That's a pretty wide-ranging hammer, October the 7th. So this is a very protected, I do mean protected, territory out here. So then where is it that the Great British Pound is headed to? Well, all it's got to do is really clear this 124-ish range, and then it can head all the way back up to the top. Maybe it's nothing more than a consolidation-oriented pattern. I don't know until we see what would happen in the 127 area. But we do know that this is a very strong support. The pound's going to get stronger. That's what this is communicating to you and I. That's going to influence the U.S. dollar index to get weaker. If we take a look at the euro out here, it's having a strong day. It's been in a very nice, steady, or if you prefer to say it the correct way, a steady, nice little rising trend out here. This is headed back should be to at least the December 8th high out here. So that should go ahead and put some further weakness inside of the U.S. dollar. You already know how the Japanese yen, or what the Japanese yen is communicating to you and I, broken through a nice level of resistance. So that's going to get stronger, U.S. dollar. So it's really up to the loonie, not the loony bin, but the Looney Tunes, Canadian dollar. And, of course, you can take a look at the Swiss franc and the Swedish krona. We're not going to, because we now have like 57, 67, 77, 80 some odd percent of the U.S. dollar index. So I just share with you that the message, as we speak right now, is that the U.S. dollar index wants lower price. That will bode well, should bode well for metals. Well, I don't know if it's going to necessarily be a big, huge influencing factor on light sweet crude. Can't hurt, so to speak. But, I wouldn't I'm not going to be in that camp out here. Light sweet crude is basically doing not a whole lot out here. So, priced in dollars or dollars, is it something to pay attention to? Yeah, sure, maybe, sort of. I don't know. I think this one could be the wild card. We could actually see the market go up or the dollar go down, mining metals go up, then the light sweet crude, maybe you can't bust them up. It's getting ready to go lower out there. I know it would be unusual, but I'm not against making that kind of call. Right now, the call, though, the correct call, and I do mean correct call, is nothing but sideways action inside of light sweet crude. Probably best to be looking elsewhere because it's really not giving us any kind of topping or bottoming signal. We just know that it's not really behaving all that great considering what has transpired inside of the U.S. dollar index out there. Okay. Jill wrote in and asked me if I could take a look at the XLF. In essence, Jill was saying, hey, I'm not in the XLF. I want to be in the XLF, and how do I figure out where to get into the XLF? So I think that is a great question out here. That's a great question that anybody has, or we should all have, right? When something has moved, we haven't been in it, and how do you plan ahead? So I really appreciate the email because what Jill's looking to do is she already has made her mind up that she wants to be long the financial sector out there. So that's an important thing. And now when it is that we are neutral, that's the best time to go ahead and put together the game plan. So the question was, how do I figure out where support is? And so there's a couple of different ways. There's a number of different tools that we can use to figure that out. Now, let's first do this. Let me just turn this off. We'll try to identify a couple of those tools out here. When I say I'm going to turn this off, I just really meant these TAS market profiles. Let's go ahead and add volume, though, to the chart. Just take a look at today and see what the XLF is doing. So 48 million shares to the downside. And it's really kind of going into, it's not kind of, it is going into the trading session from December 7th, 120 million shares, right? Just go to the left-hand side, say, what are you going into? Where's your supply and demand area? Just to see what's happening. Just picture, I think Tom did it best, said it best when we took a look at a metaphor. Are there people in the store? So just picture yourself at the mall, and you're walking past the store, right? And you go, horizontally, nothing wrong with horizontal out there, but horizontally is what you're really looking to try to figure out what is it that you're going into. And you're now peeking in the store. This store happens to be, as you're doing a replay in reverse in your mind out here on December the 7th, had 120 million people inside the store. Sounds to me like an Apple store out there versus versus Macy's, right? Yeah, probably so. And what's coming out of the store is they're not all coming out. They're not. It's not a stampede. It's just a few people coming out. Not a third, a little bit more than a third of the volume so far today. So pulling back on light volume out here. The most recent swing point would be the trading day of December 29th. Always hard to gauge what that volume really is, but there were 39 million shares. You're at 48, so maybe there's more of a pullback. Ideally, where would this pull back to? I know you're going to say, hey, can you get to it already out there? And the answer is yes, but I'll have to get to it when we get back from this break. But look at volume out here. The next real target for XLF is probably the trading day of November 14th, around $22.33. Steve Rhodes from TFNN.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. So let me speed this along here. We've got a couple of questions that came in, so we get to them all before the break. So first, what I'm looking at out here, Jill, is I'm looking at the trading session November 14th. Nice wide-ranging bar accelerated volume. And so the one of the places to look at is going to be 2233 to 2185. If we put our TAS profiles up on the screen here, this is going to give us some areas where price could pull back to. This says 2208. To 2119. So that would be the range you want to continue to see as price moves back in that area for it to decelerate, not accelerate. If it's accelerating, then the lower price really becomes the target, 2119 out there. Other things that you could do is you could use retracement levels, just simply a dead cat bounce out here, meaning a move to the downside is going to give you 2136. So that 21-ish area is looking mighty, and I do mean mighty, mighty find out there. I've got a question. If I can take Danny in Atlanta wants to take a look at the platinum contract. Danny, what month is trading out there in platinum? I'm just going to go with the continuous right now for us, although it's going to change probably. I don't know. Is it March out there, Danny? Is it March? Is it March? I don't know. Let me see out here. I probably can figure that out pretty quick. H7, let me see. April. It's April. Thank you. Okay, so let's go take a look at that way we can get some better profiles out here for you. There we go. So now we've got the April contract. Yeah, that's for sure. So, I don't spend enough time with regard to taking a look at platinum. The yen is an example, but here's what we know about the platinum contract. Right now, today, it's struggling with its TAS daily profile at 986.60. You close above 986.60, it's going to continue moving higher as well out there. So I would just watch that area as a level of resistance. A level of support ought to be 964.60 out there. So I hope that assists you with regard to that. Had a question, if I could take a look at soybean futures out here. And as we were here, we are taking a look at, now, if we just take a look at this chart out here, what we know is that is trading above its a weekly TAS market profile. Weekly means, hey, is it going to be trading above this level on Friday, which is 1064.7 out here? If we take a look at this, the question was, can we make a case for this to move higher? And we can. However, I've only got the continuous contract for this. For my other charting software, I don't have the current futures contract, but here's what we want to take a look at. If I come off of the low, and this is what you want to just go back and confirm for yourself, but on the continuous contract, if I come off the low from September 27th out there, and I start doing my wave counts to the upside, today's push higher inside of soybeans has created a potential seventh wave move to the upside. Now, I don't know if it's really a seventh wave move to the upside, and I do know off of that low it is. However, it made such a correction off of that sixth wave out here that really it could just be in the second wave. Could be just in the second wave. When you come off these waves and you get a six wave move down, Mr. Z, that's when I start to question, But look on the contract that you're trading, because it may not have made. I wish I had the time to go ahead and set that up here for you, but I don't. It probably is, but I've seen where it's, just go check it out. You know how to do that. So I would be more inclined to say, yeah, it's probably in the second, not the seventh wave, but the problem here is that it has been moving higher with less relative energy out there. When it formed a bottom on September 27th, it was moving lower with less relative weakness. And so those are patterns to pay attention to. It's not a bearish reversal signal. This is just an indicator. The signal comes when the bears show up and they give you a bearish reversal signal. So I have to go with caution, but that caution would say, yeah, prices should move higher out there. So I hope that assists you guys. Gals, thanks for being here. Stay tuned, because my favorite polar bear, and he should definitely be your favorite polar bear as well, David White, he's going to be up next. Tom O'Brien Show 3 to 5, Andy Heck from 5 to 6. Have a terrific Tuesday. We'll see you on Wonderful Wednesday, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.